Here with another video. Sorry about yesterday, you guys, that I wasn't available. I had a little bit of a stomach flu, but I'm all better now. But moving forward, we're going to be talking about the US dollar and see where our price is going to be able to break out. Let me just get that. Whoops. All right. Sorry about that, guys. Okay. So that being said, doing the US dollars current. Let's see, going to my volume. Okay. So yeah, talking about the US dollar. So now we're basically in the middle of the month. So being so that we're in the middle of the month, we usually can see a reversal or some type of formation where liquidity is going to be dropped to a different side. Okay, so I want to talk to you guys more so about how the dollar usually could end, like how last year it ended basically kind of it had a little of the same structure, but it was just prior. It was actually in January when the formulation hit where it actually made this reversal formation here. So the market had a full correction. So this was actually different than what we're seeing now. Because now that this candle, as you can see, that this was the beginning of January, but we're already seeing that formation at basically the middle of December. So we're right now we have two ways that the market could possibly be going for the USD JPY or most US dollar exchange pairs or currency pairs that are against the US dollar at this time. So we can go and see that most of these pairs are at a lower low, right? So we can see Great Britain pound. We can see that that's at a lower low, making a this is pretty much the structure zone right here, and then obviously this is where that stop hunt was made, and then obviously we could see that reversal to the upside after they have dropped all the liquidity from one side of the market and then drive price up to the opposite side. So we're going to obviously see a big reversal correction where there's going to be a lot of momentum because for the end of the year, there's just going to be a nice, like maybe a week where it's just going to be very high volatile. So the market, like, so for instance, it could be possibly like when the market made this type of formation where it just ran down after this consolidation area, it just dropped for about 7 to 8 days, and then it dropped price. So we could possibly see the same formation where price can do the same thing to close out the end of the year at newer highs. And obviously this is where I'm thinking price is probably going to close for and I'm going to go through each pair and show you guys where I believe price is going to close on each one of these pairs as well. So let me just take care of this. So as for the Great Britain pound US dollar, I see that price is possibly going to test this previous high, the psychological level, which is 129,500 at this resistance area where it broke out of at the middle of last month. So we're basically a month later. So maybe we're going to see that full month reversal where it takes a month down, induces those short sales, that stop hunt, and then obviously by the January, right, it's going to be at that previous high. So then market makers will actually be able to make some money on this side of price as well. So that's where my hypothesis for the Great Britain pound US dollar. So I do see the US dollar in generally having that correction. We're due for a big bearish correction for the US dollar. We haven't seen one for a very long time. I mean, it's been very bullish since March. So we should be seeing that correction in the near future, and obviously seeing price go into new areas. Hey, how's it going, Mike? Yeah, back at it, man, back at it. And we're gonna obviously see this correction probably test these lows. So what I want to see for price is that we're on the daily chart because I don't really want to go into like lower time frames at this just right now because we're just going to be looking at it from a broader perspective. But if you guys do want me to go in lower time frames, and obviously I'll be back on my signals next week. I just had to just get over that sickness. Don't want to be giving you guys anything when I'm not in the right state of mind, right? So possibly that the market had that tested that previous high, and then you could see maybe that market could possibly do one more false test to the previous high, induce those buyers one more time, and then take a short sell, right? And then have all this liquidity that was built up right here on for the long positions, they're actually stopped out now. So that could possibly be our designated strategy, or that's what we're looking to do for the end of the year for the next 16 days. And that's how market structure is possibly going to be looking for. So I am looking that the market is trapping buyers right now, as I can see that it's making this W formation. Let me just actually get out of these real fast, redo it. I can see the market is making this W formation at this high, and then possibly this, and then I know that market's not going to break this high definitely by the not by the end of the year, because the range of this month is probably not going to be executed above that high. So we could probably see a false breakout to that high, and then obviously see a correction. Maybe the last week would be the last week of trading is going to be a big week, or obviously next week will be the start of that correction for the US dollar in general against most pairs. Because if you look across the board, I mean, Euro USD is looking like it's making this pennant formation at that structure low. A lot of pairs are making this formation. So like what I'm looking for is a structure that flow is going to be at least to the upside for the Euro USD. And then obviously, if you guys didn't know that, when USD JPY is making higher highs, usually Euro USD is making lower lows. So it has a polarity aspect to it. So we can use that as this contradicting structure as well. So when we're looking for these different elements and positions and zones, we're going to be able to quantify or be able to establish a better position entry by having that accessibility. So as we can see, that market is possibly making, we saw that this was the first market came down, it shot that leg out, and then obviously that's where price went back up, it tested that previous high, and then it automatically came right back down to that low again. So then now I'm seeing that confirmation for a buy order should be soon, because we have confirmation that market had a first leg, and then obviously this is the second leg of formation with two, and then we're starting to see higher highs here. So this could possibly see a bullish takeoff, and then we would obviously wait. We wouldn't be looking for like a long-term position just yet, because we don't want to get caught into a falsehood breakout saying that the market could possibly come up into here, because we can see that right now that it's making this consolidation symmetrical triangle right here, right? So for maybe possibly it's going to be an ascending triangle, and then we can see that price is actually could go up now, break out, and right out of this next week it can break out, test this new psychological level, right, this previous low, and then we could see that market might break down. So we're going to obviously just not the entries that I'm going to be taking are not going to be like substantially like a very long swing trade. It's going to be a couple day hold trades, because of the possibilities that it might be a false breakout when the market induces buyers, that for a lot of scalpers, people that scalp in the market, the possibilities of you making a lot of money over time, it gets hard, because when you're scalping the market, you have to know so much more than just the average trader, because there's so much indecisions and so much false breakouts and so much wicks and so many like whipsaw formations, like that. When you're doing this, you got to be very, very, very on your game. So we're not going to be taking a position that's going to be super long, but we are going to probably be going long on the Euro USD, and then we're going to be going short the USD JPY, just because if I look at previous market structure. So first I look at structure in general. So I see that price is showing that 114 flat is a very big resistance. So I know that that's probably not going to break that the range, right? That's probably definitely not going to be touched. There's obviously take profits up in this area, so probably not going to be executed. We're probably going to see right here, I call this the false W formation, because when it's at an angular position, especially when it's the last leg, the second leg, which is this leg right here is more slanted to the downside, I can see that it might break off and then go to the downside, just like how price did earlier in the market last year at the same time, actually, which is very interesting. How market made that structure, and then I'll show you guys previously, market did the same thing, or it made that structure just like previously. This is last year, basically the same time, made that structure, and then made that exact same formation, where it's that kind of that false W where it comes in, and then it obviously takes out. So we possibly might see the same direction looking at price with the possibility of price actually testing those previous lows. So what I mean by that is that price could possibly now see the same formation once again, and then now we're going to try to see 11,500 as a sustainable area for our take profit area, because you know, we want to look for previous structure, because price, obviously this is where it was showing a lot of support. So then obviously we want to see that area be retest once again, because now that support can have another entry, and then possibility if it you know, market doesn't want to do that anymore, then it's just going to obviously keep on falling for the next year as well, where price could probably keep on going as well. So really exciting stuff. All those wicks in the market's trying to confuse. Yeah, exactly. Yeah, a lot of wicks right now in the market. It's just a lot of So what wicks mean? So basically, there's these formations that I want to show you, and they're called star formations, or we can call think of wicks as hands, because all wicks are is that they're trying to grab orders, right? So all these wicks have orders that are being filled, right? So if you look at your broker can open a spread up, right? So if your spread, it might be 2 to 3 pips, your broker can open it up maybe 6 to 8 pips, so it can be like 12 pips, right? So even if you had a trade at like 112, like 370, you would have been opened up at like a trade at like 112, 250, because the spread plus these wicks are basically grabbing your buy orders and then taking them up or taking them down and blowing your stop. That's why when you see a lot of these wicks at the high, especially when you see them at the high of the week, it happens because market makers are looking to basically trap these buyers by opening their trades, their pending orders, and then obviously driving them off the board by hitting their stops. And then they do the same thing on the other side, where they'll have these huge wicks, and then they'll drive price the other way and try to hit their stops as well. So they do that in and out. So that's why a lot of wicks are happening. And then also it's a battle right now. So basically that's why I know there's going to be a breakout, because every single time there's consolidation, there's always a breakout after that consolidation. So I'm looking for a nice, you know, hopefully that we do see that nice reversal, and we do see a nice leverage, because it is basically going to be the end of the month very soon. There's 2 weeks left. So market obviously is going to want to, you know, take these buyers out of the market that are here. And then obviously the best way to do that is by driving price down to 11,500, this previous psychological level, because some people think price is going to just keep on going to 11,500, but they don't understand that there is a market range where price can only go so many pips per month. So as of right now, it looks like market range is already been exhausted. Looking at price already, you know, market test. This is so let's look for December. So obviously December was mostly a bearish month, right? We saw market come down, and we saw that there was about a 5-day retracement, and then obviously we bought. They induced these sellers one more time at this area. They induced these sellers acting like it was going to sell, because this was obviously a full candle at one point, and then came back up, you know, and hit their stops. And then now we see the price coming back up again, you know, trying to confirm with this previous area. Doesn't break, as we can see that price looks like it's going to close this day. So this is the second week, so there's only 2 weeks left. So it looks like it's already going to make a morning star kind of formation, you know, and we want to see that the market is now going to have confirmation that we're going to see that bearish turnover in the near future, because when we're trading, or at least essentially what I want to when I teach you guys is that we want to look at it like where's the bankers are going, or where is the market makers or the proprietary traders looking to push price for the rest of the year, because they're going to push it quick, and they're going to push it very very quick, and a lot of volatility. So you can make a lot of profit, or possibly if we did see this take profit at 11,500, that'd be a really sustainable increase. So if we were to take it at this high, that's going to be something that we're going to look for the next couple of weeks. So going over gold, because obviously gold is a crosspair of dollar. So when gold is basically down, the dollar's up, and vice versa. So kind of like with oil, but oil's a little different. So I'm gonna go to Great Britain pound JPY, Michael. I'll get that in a second. I just want to make sure that people understand that. So that the crosspair of the dollar is gold, right? So when we see that gold is making higher highs, and then now we saw that price got scooped up above this 200 moving average, and we saw this retrace for the day, we could possibly see a nice bullish run to the upside, obviously testing these previous highs. And essentially, we're not going to be looking for anything. Probably price is going to end, around this area at 1,260 for the end of the year for previous price to be ending. So we see that nice swing low, where market is now making those higher highs, and then now price is going to move up to the upside, and then probably even out here. So actually, there's a diagram I really want to show you guys. I'm going to have to show you. I'm actually going to put it in the Discord so you guys will be able to see it. It's actually something really cool, where there's these psychological patterns that are basically momentums. And like I was just studying this, and basically it's like very interesting how that the way that it's like a wave, because we got to think about the market's just a wave of emotions. So like it's essentially like this is an area where the market is now getting into the disaster phase, and then the disaster phase is established, and then you have the recover phase, and then now we're back to basically normal. And this is where we'll see these formations over and over and over again in the market consistently, for years. So it's like if we can just master the waves, and obviously structures and supports and resistance is great and all, but essentially if you master the wave, just the overall gist, you don't have to take all that into consideration. You just got to make sure that you know what area is what, and then you're able to make a bunch of profit that way. So I'm really excited that I see that this confirmation is happening, and this is probably going to be closing. It is going to be closing in about an hour here, hour or two, and we're going to see that this is now structure support. Previous resistance is now support. So now we're looking at that as a bullish. We're looking to buy for gold right now. So now that we know that we basically have a buy order for gold, unless that market decides to come down here, it does what it does, but if it doesn't, and it does keep this structure, then I think that price is going to actually rise up to this level. And then if we can see the same amount of percentage from here to here, we can see the same thing happen on all the other pairs, where a lot of other pairs are going to be essentially doing the same thing. So we're going to be seeing some potential areas and how that is going to work. So now we're looking at Great Britain pound and JPY. We're looking at a buy here. It's really looking solid for a buy. Obviously, we have that formation to the downside. We have that second leg confirmation already established right here. We have that first leg right here. This is the second leg confirmation. Comes from that swing high, made that swing low, had an information with that confirmation at that buy, and then obviously we're looking to go up to previous highs. As of right now, we can see that structure is not really going into the down position now. We can see that formulation of structure has been already established. So since that we see structure already established here, we now could look for a W formation, a big, huge, really W formation, and probably at least be able to probably at least take profit at 145 flat, for the next couple days, if not the opening of next week. So we'll see how Sunday candle opens and see how it goes into Monday, because Monday and Tuesday days are usually like market consolidation or their runs, depending on. So right now, since we see that this formation has been established, we're probably going to see a buy order. So let's see if this candle formation is established correctly. You can see, yeah, so this candle formation is basically we don't necessarily see a morning or evening star, but if we were to look at probably a different time frame, we'd probably see like an engulfing candle, because we have two candles that are formulated together like that. So this is just obviously a nice setup resistance at that low, and then now we have the possibility of price catching that high. So this is what obviously we're going to probably take into consideration moving forward as the direction of price. But we'll see when price opens up on Monday, or excuse me, on Sunday, exactly where we see the price from there. So now that we can see where the U.S. dollar is possibly going to be going in the near couple weeks, or the next couple weeks, I should say, then we can now really determine that we got to look for dynamic support. So this is showing a higher high, second leg MW formation with perfect second leg is higher than the first. That's good. That's great actually. So then we can obviously see probably a nice bullish retracement here. So as you can see, that AUD USD is going to definitely be a bullish trend as well. So we can see that we're most certain that the US dollar is going to be going for a correction for the next couple of weeks, and then going possibly into the new year, right? So because we can see on every single chart pattern that's basically paired to the US dollar right now is basically at a lower low. So same thing here. We see that peak formation. Oops. Let's take this out real fast. So we see peak formation, which is the ending of a trend, right? This is a micro trend, essentially, for that bearish. It started in March, around March. And it was obviously trading for that lows, caught that retracement, and then broke that angular trend right here. As you guys can see, that it broke finally, and then now it has that support. And then we had that false induce to the high, and then come back, hit people's stops, and then now they're going to now drive price to new highs, because now that this is a micro anchor leg, and we talked about what a micro anchor leg is, basically when it's a stability after a head's been formed, right? So the peak's been formed here. As you can see, the peak's been formed. So after a peak formation, what you want to look for confirmation for a reversal to whatever side, you want to look for market to have a structure that doesn't break the high of, or the peak of that head. And then now you can start to see market make lower low or higher lows and higher highs. So we can take, for instance, we'll look back at price, same thing here, where price makes that peak formation and then makes that structure leg, which is called a micro anchor leg, and then makes that support, and then now it's buy. So we're going to basically be seeing that where market came up, came down exactly that way, induced those buyers, stopped them out, made that structure leg, and then drove price higher. And that's exactly what's happening here. Market draw down, structure peak formation was established, hit their stops, and then move price higher. So we're going to be seeing some really good positions. Honestly, it's going to be really, really good for most pairs. The one that I really like right now is a USD CAD, probably because this is the one that probably stopped me out the most in the last couple of weeks, is because it kept on making, so we had that false M formation right here at price low right here. I thought price was going to obviously come here, drop back, and then now or see you later, but didn't. Obviously had more room to go. So that makes a lot of sense now, because we want to build up as much liquidity as possible before a big run to the opposite side. So essentially, we saw that market again has been trending, right? This is obviously considerably a full trend, since September of last year. So then we've been seeing higher highs and higher lows. So where would price possibly be for that retracement where we would like to see it end this year? And we would like to probably see it end at that 500 range with previous structure before that next breakout. So price was in this range for quite a bit of time. Try to retrace it, try to break it, didn't break it. Had to make those lows first. Price had to come down and make 3 low confirmations. And this is a huge understanding, guys, of knowing when price is going to rebalance. Is usually when price is making 3, and this is obviously when you're going against trend. So this is counter trend trading. So this is what I mostly look at when I counter trend trade. If market makes 3 bounces off an angular support, and then if the third one shows a peak formation, like 80% of the time it's going to be a reversal. Like it's a very high probable time that the market will actually reverse, because it's just basically giving you time to sell, inducing the sellers, right? Since basically, I would say July till October, and then all this liquidity that was built up in this area essentially is now driven to another side of the market, hitting out all those people's stops that were essentially trading that swing trade for the downside of the USD CAD, thinking that that was the end of the reversal. But what I like about this is that the market is now showing exhaustion. So with market showing exhaustion and hitting very key support levels, I mean, we can even look back where key support levels as of right here and here. So these were areas that the market was essentially a very, very key support. And then if we look at price barely is above that area. So it's a trap. So basically what they're doing is that they broke this high, this support level, right? People think that, oh, now it's going to be a buy because it broke the support. All they're doing is going to trap you by having a bunch of wicks. The first thing that you have to look at for this confirmation as it's a trap is that there's a bunch of wicks. There's a bunch of pending orders being grabbed, right, by all this liquidity. And then now price is going to build up as much consolidation as possible before they drive price the opposite direction, hitting your stops. So this is a huge confirmation. I still think it's the same thing, M formation. The second leg just a little higher, and then we can obviously see that there's a lot of liquidity trapped right there. I mean, there's millions of dollars trapped right there. Could be even billions of dollars trapped right there. A lot of buyers right there, buying, because they saw that it broke this previous high, and then it showed a false support. And then what do you know? By the end of the year, boom, all your stops hit. Now test that previous low or that structure before you saw that trend. So these are some big positions that the market is looking to do in the near future. And not just that, but in general, it just looks like a really good correction. And obviously, we're trying to find that best structure to get into price right now. So we'll go over oil right now because oil is obviously integrated to the dollar. When the dollar obviously, so this is what essentially I have been skeptical about, because the dollar obviously has been skyrocketing, but yet oil prices have been plummeting. So essentially I'm looking at it like, okay, this is obviously just propped up, the dollar is just being propped up right now. It's like literally being propped up. So essentially I'm looking at it where kind of like when we had the credit debt obligation, and everybody was not being able to pay off their debts. Well, from 2000, well, this was already triggered in like 2006 going in 2007, but it took till like summer of 2008 to actually for the market to start to have momentum for the downside, right? So like it was not till later on. It was being propped up on basically people like trying to keep it, stimulated when, it's obviously built off nothing. So like that's what we're talking about, how the dollar is correcting, is because we essentially are supposed to be in a surplus economy. Just because of everything has been substantially growing. We've been having low unemployment, stock prices have been going high. Obviously, not a lot of things. A lot of data out of the U.S. economy has been very, very high since Donald Trump has been elected, right? Well, then yet we can see that it's been propped up because a lot of the increase, the stimulation that we had was just money flooded into the market. It wasn't grown from the economy. It was just piled in there, and then it stimulated. And then after that stimulation is done, you're going to have a correction because our economy essentially can't keep a stable higher momentum without having money just dumped in it over and over and over and over again. That's why we have the biggest deficit in the world. So like it's very very crucial that this is literally showing right here that. So if you guys didn't know, but oil is priced into gold. Gold and oil a dollar and oil are basically integrated with each other. So like for instance, like if Mexico wanted to get oil from Saudi Arabia, they have to pay in dollars. They can't pay in pesos. They have to go literally exchange into dollars and then pay with that. It's literally correlated with each other. That's why we are essentially we're the cash cows, or we have the most power in the United States, because we have the most currency, right? Our currency, the U.S. currency, is the power currency of all the world right now. So like when I see this, where I see price oil going down, but I still see the dollar being propped up, then it gives me more confirmation that a lot of these other pairs, especially these cross pairs that are showing very, very, very big signals of reversal, it just gives me so much more confirmation that we're going to be looking for a correction in the US dollar in general, with the market structure and how price is going to be moving. So, it's really great things. I actually am really excited about this, and next year should be very, very, good for a lot of other currency pairs, especially Great Britain pound, Euro dollar, and Japanese yen, and the New Zealand dollar, and be seeing, those swing highs. So, if you guys are looking to do swing trades or, hold position for, a little longer than expected, then I definitely recommend next year being it after we see confirmation first. So, this was a huge area of consolidation we saw between. So this is the beginning of the year. We saw that this was the beginning of January, or mid-January until April, and then we saw the breakdown of price, and we saw it for about April, May, and then a partial of June. So we saw a big trend breakout. So this is where I essentially am talking about when price is looking to reverse, it will give you confirmation by looking at the opposite area, right? So price comes up, obviously is making bullish, consolidation, trap those buyers up in that area. We can also call this the market distribution phase. And then we see the markdown phase, which is the fourth market phase in the market structures. And then we look at previous structure, and previous structure is showing that there is a huge support level where we're at right now. So where we're at right now is a huge support level. So now I'm looking at it, and I'm looking at with what the dollar is doing right now and what oil is doing right now, and I'm saying, looks like the market is going to go and test previous highs here, right? So that's like where I mostly start to speculate and stuff like that. So we can see that Monday, or this was also the moon cycle. So we talked about moon cycles in previous videos, where moon cycles are basically integrated into the stock market, or in the whatever option market you're working with, because it correlates with how we are affected by the moon cycle, how we're emotionally, the electromagnetic frequency that's distributed from the moon to our neuroreceptors, or our neuroplasticity, this actually correlates and makes us move and think differently, kind of like an illusion, if you let. And how this kind of works is that when we see, so there's like the three things that are super essential to any markets. Is first is just psychological numbers, because like we can look at every single pair in every single market, and all of them end in either 000, 250, 500, 750, and so forth, right? Or they're always 50, or they're always at a zero at the end. Just simple thing. Us humans, we like to have even numbers. It's easier for us to comprehend. So it plays in the market because, right, price is driven by people, or money is made by people driving price, right? Putting money in the market. So now that we see that and we know how order price works, now we look for the second thing, and we look for break and retest. So the market essentially always will come into one area, break or give you confirmation, and then give you that same polarity, right? Give you and polarity is basically has the same opposite, or they basically have it's a structure of one side, right? Everything in this world has a polarity, right? This book basically has a back, so everything has essentially a back and a front. So when we look at price, it essentially has the same thing. It has a front and then it has a back. So that is like the most important things, because once you have these basic strategies and so forth that are integrated, then now price can be going and killing it. It is like liquidity buildup and fuel for lift off the opposite direction for lift and descent. Something is telling me we are already in a recession. We're essentially getting into a correction for sure, Michael. Definitely, it's looking like it as well. It really does, especially how Bitcoin is right now, this low, especially after we saw that break at 6,500 at November. I mean, we can see that, this is going to be a safe haven for a lot of investors, essentially, when, the market's going to go to the recession. Because if you think about it, crypto is one of the best, markets to put your money in if the dollar is not going to be going in a sustainable route, or, a lot of other your financial and investment rules aren't working. You can put in crypto because a lot of people are going to go back into it. So when a lot of people come back into it, they're buying at that super low, and then essentially this could be, like I talked to earlier guys about, it could essentially be that bear trap where all this was induce sellers to go short, have FOMO, right? Fear of missing out. So we have that FOMO, and then after we get that confirmation that they have all left the market, then all you do is just drive price back up. And we see it in so many markets. We've seen it. If you look at companies, companies do this all the time where they'll have, a short squeeze basically, and then they'll have to have a merger, and then they'll basically need an investment company to bail them out, and then out of nowhere, stock freaking just goes up like crazy after like 2 or 3, 4 years, right? Where all those people are like, oh man, I got out when, the market was dipping. So essentially it's like when people are feared, that's when the best opportunities are available, usually, right? So smart investors are buying here, right? This is like there's actually something that I researched where smart investors are buying obviously in this area, and then you got friends and family mostly looking or I would say like in this area, and then you have media, and then you just have fucking greed, and then you have that polarity aspect where it's going to have to come down and retest a previous structure, because always likes to break and retest, so that's what it does. So I was always wondering, I'm like, I always knew that the market was definitely not going to be sustainable, but when that came back down, that was a huge area of, okay, maybe, I got out, even if you got it at 2,500, and you rode up to 7,000, it's not always about, making a million. Sometimes, you just got to make enough to, pay the bill. So, if that is all these structures that I'm going to be showing you guys in every single chart pattern, they're all similar. everything is essentially integrated with the same thing. So really cool stuff. I'm really excited for the US dollar to be going to the downside. I'm like 6 months. I made this analysis for the USD/JPY, which was made for a short of the US dollar, but it was basically going to be starting in August of this year, and we saw that price kept on making higher highs. So then now I finally have my thing coming to fruition where price is going to be going to the downside. So really excited to use that strategy that I have available, and I'm going to be doing some really cool entries and strategies for that for when we see that reversal to the downside as well. And even if we see 11,500, the best thing that we're going to see, especially if we're looking at USD/JPY, or the JPB/JPY, we're going to see that retest of a previous psychological number, and then we're going to see price obviously have that polarity aspect where this is the market accumulation phase. Excuse me, let me just redraw this. Move. Market makes the accumulation phase, market up phase, market distribution phase, market down phase, and then back to the accumulation phase, market up phase, right? And then so forth. So, on and on and on again, right? Kind of making a big old W formation, right? So it's very, very cool stuff, you guys, that these formations happen all the time in the markets, especially with the higher time frames. If you're a higher time frame trader, which is really cool, that a lot of these same formations that are formulated on the smaller time frames that I use on the 15-minute time frame, you can be using the same thing essentially on the higher time frame. So hopefully that we're going to be seeing this big retracement, and we can obviously, if we're looking at a macro perspective, we're looking at, say that price was making, this is the peak formation, right? So just like previously, price made that high and then came back before it rose up higher, right? So if you looked at the AUD/USD, it did the exact same thing. The price made that. See how price came. This is obviously a way lower, smaller perspective, but it's all integrated from the smallest to the biggest. So see how price made that low, obviously came back here, and then is now going to go higher. So when we see the USD/JPY, we could essentially see that could be how it is, making that market anchor leg, at that 108 level, because that 108 level is super, super, super crucial. I mean, it's a big structure area. So really cool stuff. I'm really excited for, this next couple of weeks of trading. Definitely going to be looking for shorts, anything on the US dollar pair, and then longs, especially the Great Britain pound and Great Britain pound Japanese yen as well, is looking really strong too. So if you guys have any questions at this time, feel free to put them in the comments as well. Really, yeah, I'm going to be doing my analysis over the weekend, and then going to be doing some signals as well, probably on Monday, Tuesday. I try to do signals on Sunday, but knowing me, I completely forgot that that Sunday is a trap day. So essentially, when Sunday is, what I mean by trap day is that if we look at a smaller time frame and we go to Sunday, is that what Sunday essentially is that it tries to induce you into an area of support or buy. So it's basically going the opposite way of price for the rest of the week. So it will like show you that price. So this, let me try to find it. So say that price was showing this high, and then we're buying, and then we take that, we get some pips in there, and then by Monday morning London session, we're already making that low, and then making that lower low. So for Sundays are big days where the market tries to trap liquidity, and then Monday is another day where price tries to basically trap again, and then it goes into its session. So we'll go over that into future videos, how each day is played out, how each market is structured, and how each day actually is assembled for the market makers. I actually want to show you guys that one more thing before I get off for today's live stream. Let me see if I can pull it up actually. Cool. So let me pull it up real fast. So, okay, cool. So, yeah, this is a perfect example of it doing exactly what I was saying, is that essentially that Monday was that consolidation, or excuse me, Monday right here is at the consolidation, that trap, and then Tuesday, and then now it obviously is hitting the stops of this high, making that Wednesday, and then that by that Thursday is already reversing, right? So that's what we're talking about, that reversal. When that happens on that Thursday, you know, we're waiting for previous structure to actually show confirmation before we're getting into that next position of trend. So that is a big one, and we're going to talk about zone hopping in the next video, how these zone hops apply in the market, and we can say there's shift bars as well. So really, really cool stuff, you guys. And I'm going to be doing some stuff on the Discord after this, so you guys be able to chat with me there. And hope you guys have a great weekend. Be safe out there, and I will see you on Monday. All right, guys.